Welcome back. 8 IPOs, that's a lot, taking place across the NYSE and NASDAQ this morning, with AssetMark Financial just opening for trading last hour, getting a nice pop in its debut, currently up better than 14%. Now AssetMark CEO Charles Goldman joins us here at Post 9. Charles, congrats. Good to have you.
Thank you. Great to be here.
So you got an interesting mix of challenges and opportunities. Your controlled company, owned by Huatai Financial, a Chinese company. You list in your risks in the S1. CFIUS is going to look at all kinds of things when you potentially try to expand. What's the first thing you think investors should know about your company?
I think investors ought to focus on what we do and the value we create. We work with independent financial advisors, and our focus is to empower them with a full platform of capabilities and to serve them with white glove service that allows them to scale their practices and focus on investor needs.
How much turbulence do you expect in the stock, just given the trade situation between the U.S. and China? That there are a number of China-based stocks that tend to move based on not necessarily their results, just based on what trade tensions are doing.
AssetMark is a U.S. company. We're a U.S. company. All of management owns shares in AssetMark. There's no connection at all between HSTC and ourselves. They're great shareholders, but that is what they are. They're shareholders, and so we operate as a U.S. entity. And I would add, we're highly regulated, and we focus on data security and capabilities. And we've had no connections between the two firms whatsoever. So in answer to your question, I don't expect any turbulence whatsoever.
When you talk about being an end-to-end platform, how much of that is people and how much of that is technology?
It's both. AssetMark is unique. We definitely build a lot of technology. We try to deliver everything an advisor needs to operate their business, but we surround the advisor with people. If you think about an independent advisor, they're in the people business. They are thinking about investors and trying to solve investor needs, and they're looking for a trusted partner to help them do that.
We spent a lot of time talking about the war between active and passive. Has this year done anything to inflect that balance, maybe into the benefit of active managers?
You know, we focus on building great portfolios for the long term. We definitely look at the active-passive argument, and the way we think about that is let's put the lowest cost instruments that do what is needed for the investor, and then let's use portfolio construction in an active way so that the investor's needs can be best met. At the end of the day, it's all about investor needs, investor risk tolerance. We all know that keeping investors in the market is what matters, and doing that is what we try to accomplish each day.
How about U.S. exposure versus international? Where are you?
We do both. So our fixed income is primarily domestic, and that is really the choice of advisors and their clients, and equities are generally global in nature.
Is this an ideal sort of market to be going public in? I mean, the U.S. market has been doing extraordinarily well, but then at the same time, you say you have a global view. There are a number of other markets that aren't.
You know, from an AssetMark perspective about going public, we're going public because we're at that stage in our life cycle. We're at a point where we've reached scale. We're trying to broaden our shareholder base. We think it's a great time to be doing what we do, which is supporting investment advisors, independent investment advisors. So for us, it's the right time to go public. We're not focused on what the stock's going to trade today or tomorrow. We're focused on the long term.